Welcome to Real Talk Real Estate, the show where we cover how to build wealth in real estate with no fluff, no BS, and no sales pitches. I'm David Green, and I've been doing this for over 10 years. I've seen the ups, the downs, and everything in between. This is the show where we pull back the curtain and show it to you too. So if you want to build wealth through real estate or you just love learning about it, you found your home. What's going on, everyone? I am David Green, host of The David Green Show, joined today by Big Brain himself, the Lone Ranger, Christian Bachelder. This is Mortgage Monday, the show where we bring you mortgage updates, news about what's going on in the real estate industry, and relevant highlights throughout the week that we think will affect your wealth building. Today, Christian and I are going to be talking about misconceptions with the DSCR loan. A couple years ago, the DSCR loan really kind of flooded the real estate investing industry, and everyone was talking about it, but nobody really knew what it was. At the one brokerage, I think we were it's probably safe to say we were the top DSCR lender for a good period of time there, doing more than anyone in the country. Christian was one of the front runners at putting it together. We funded a lot of these. And now I'd say DSCRs are probably, conventional loans are still in most cases the better option for someone, unless they're like me and their file's really complicated. But once you hit a limit on how many conventional loans you can get, or if you make your income in non-traditional ways, the DSCR, which stands for debt service coverage ratio loan, can be really good. They are loans that basically take commercial lending fundamentals and apply them to residential properties. And at the one brokerage, we have been able to come up with some really creative ways to do it. So for instance, Christian started a program where we could take short-term rental income projections, not even income that the rental was already making, but comparable projections, and use that to fund people buying short-term rental properties. And when you're able to combine a DSCR loan and a short-term rental property and the short-term rental loophole to be able to qualify as a full-time real estate investment professional, people were getting massive tax advantages, and they were getting real estate that they couldn't have normally bought, and they were being able to fund it with specific programs that worked. And a lot of DSCR loans were done. Now, fast forward a couple years, they're common. A lot of other lenders are doing them. We're not the only people that do them. We're still the best people that do them, but other people do them. And we have been receiving questions from clients about differences between DSCR loans and maybe some common misconceptions and conventional loans. And so Christian has joined us today, and he's going to break this down for all the rest of us. So Christian, thanks for being here.
Absolutely. Yeah, it's going to be a fun one because I get these questions on my intro calls almost daily. So hopefully putting this out, we're going to try to name it some really fun on the title to make sure this gets in front of the right people. Maybe like, you don't know the DSCR loan, right? Something like that. We'll see what it ends up as. But yeah, I think this will be good. If you or anybody you know has questions about the DSCR loan, direct them to this video. Everybody knows it's a cash flow loan. They know the basics at this point. But this is going to debunk a lot of myths and maybe improper advice that you may be getting by listening to people that don't do loans. That's the biggest thing. Make sure you're following somebody that actually does these things, not somebody who says they get a lot of them, right?
All right. So what is the first misconception with the DSCR loan?
Yeah. So one of the biggest reasons, obviously the lack of income, needed, that's huge. But one of the biggest reasons why people like the DSCR loan is that you can close in an entity. That can be an LLC, that can be a corporation, a partnership, whatever. But you can take title of the property in an LLC at closing without any need for what's known as a quit claim transfer, right? Which is what you have to do when you have to close in your own name and then transfer it to your LLC. It's a huge benefit. It's why a lot of people like it. However, there's a misconception. Many people think that because my LLC is on title, that makes this a LLC loan, right? That your LLC is getting the loan. So they think they need like corporate credit, and you don't actually have to fill out the application and all these things. The LLC has to be vested for a specific period of time. None of that's true. I would say probably 80+% of DSCR loans are what are known in the industry as recourse. Now, let me break this down and explain it. The two options are obviously recourse and obviously non-recourse. A recourse loan means there is essentially a personal guarantee on the loan. That means the loan is to you. So David, you have an LLC. You bought a property under your LLC. We'll pick Pinnacle, right? That's the property that David and I own together. We bought the property with an LLC on title. However, David and I qualified for the loan with our credit, not some corporate credit. We qualified with a down payment coming from us. It was a brand new LLC when we bought it. So all of those are debunked right away, but we also signed what is called a personal guarantee. What that means is that me, the individual, have a guarantee to repay that mortgage. That means the lender can put it on my credit report. That means the lender can hold me accountable should the payments not be made. Me as an individual, okay? A non-recourse loan is similar to how like commercial loans are structured. When you buy a 150 unit apartment complex or a hotel or a gas station, typically those are non-recourse, which means the lender cannot come after you personally if you don't repay it. They can go after the asset and they can go after the LLC's assets. Now, there are DSCR non-recourse loans out there. They are the vast minority of them. We have access to them. So if you are talking to me and you specifically want a non-recourse loan where you are not the borrower, you can help me understand that that's what you're looking for, and I can line you up with that. Typically, the interest rates and the terms of the loan are not as good. So if you just come to me
Yeah,
and
and
want
why
the
is
best
that?
deal,
Why are the rates not as good?
it's more risky to the lender, right? If they can't
Mhm.
hold an individual accountable, David, you and I right now could bankrupt I forgot what the LLC that we made, that whatever the LLC, right? DC Invest, that's not what it was, but whatever
Yeah,
our
this is
initials
how
were.
I got my property stolen from me the last time. So we're not going to say the name of the
Yeah, we're
LLC
not saying it out
on the
loud.
air, but
It's
yeah,
not
the
DC
one we
Invest. So
have.
whatever, yeah, the ones that we have, right? Whatever, David and Christian there. We can just bankrupt that company and the lender can't come after us, right? They can take the property, but hey, okay, cool, bye, right? Recourse loans do not operate that way. Recourse loans, they could hold David Green and Christian Bachelder responsible for repaying that loan, right? That is the vast, vast majority. And like David asked, why are the terms worse? Ultimately, it means there's less risk to the lender. They can go after a person, not some fluff entity that you just created on LegalZoom 2 weeks before closing, right? Which is why most DSCR loans have a recourse clause in them. So you can still put your LLC on title, but a big why we're discussing about this misconception is that title and the loan are separate. Those who know the technical terms, the note and the deed are separated. You can have people on the note and not on the deed, or vice versa, depending on the loan product you utilize. The recourse nature is what you guys are mainly making a mistake on. The more and more I talk to people not familiar with this, most DSCR loans are going to be recourse in nature, even if they're done with your LLC on title.
And now that is obviously in contrast to conventional loans that are often non-recourse.
Conventional loans are always recourse. Recourse
Okay.
means they go on your credit. So the lender has you personal hold accountable. And conventional loans, you can't close with an LLC on title. You can do a quick claim transfer after closing, and that opens up a whole can of worms.
Roll the dice there, yeah. Well, another thing about recourse loans that's worth mentioning is it's not just that it goes against your credit. If you borrow $500,000, you buy a house for $600,000, you go into foreclosure and the lender sells that house on the courthouse steps for $400,000. Under most recourse loans, they can now come after the person who owned it for the extra $100,000 that they were short. So that's something else to think about. If you do this in the name of a company and you bankrupt your company and they come after the company for that $100,000, well, that company has filed bankruptcy. But if it's done under your own name, they can come after you for other assets that you have and force you to sell those assets to make up the difference. And that has not really been something of concern for the last decade because prices kept going up. But now that we're
100%.
seeing that prices are stopping and we might be slipping in a recession, this is something to think about.
Absolutely. 100%. That's a big thing that people forget about when, you can look at any real estate investor the last 10 years and chances are they made out pretty well, right? Through COVID and through even before then, things have been looking up for quite some time. People forget about these things, right? They forget that house prices can go down. I can be underwater.
Yeah.
I haven't talked to somebody who's been underwater on a mortgage in probably 8 years.
Mm-hmm.
It hasn't been something that's really, front and center in the economy. But it is something that you have to defend upon. You have to make sure that you're investing confidently and that you know the loan products that you're utilizing.
There you go. So first thing there, we have recourse and non-recourse options with the DSCR loan. What's next?
Second one is how all these lenders can vary. Specifically, I'll draw attention to the down payment. But here, let me just explain this clearly so everybody can understand. coming from the conventional realm, if you guys bought like your primary residence, right, you most likely got a conventional loan. Maybe you got an FHA. That's still a conforming loan, right? Very, very, very defined rule sets. Fannie Mae, Freddie Mac, Ginnie Mae, they establish a rule set that qualifies a loan as a conforming loan. What debt to income you can go up to, what down payments required, how many units you're allowed to get, etc. The issue when you go from that realm over to the DSCR realm is that these are individual investors. What that means is that lender A sets their guidelines. You can put 15% down. 100%. We have a 15% down DSCR lender. Lender B requires 20, but they allow for short-term rentals. So where you can get into a tricky thing is that you see DSCR loans that allow for 15% down. You also see DSCR loans that allow for short-term rentals. From the public standpoint, it's very easy to combine those two. Oh, DSCR loans allow you to put 15% down on short-term rentals. That's not true.
Right.
That's not true.
Yeah. It's kind of like saying, hey, we sell Chevrolets. Well, that dealer over there might sell a Chevrolet just like this one. That doesn't mean they're selling them for the same price.
That's right. Or we may not have them on the lot. Right? Maybe we'll sell them if we can sell them, if we get one, but there's none in stock. Right? We have upwards of probably 200 DSCR lenders. Yikes. Imagine how confusing it is for you as a client. Imagine me having to stay on the forefront every time all these lenders change their down payments and their rates and their terms and their guidelines, right?
But that's why they want to go to you.
100%.
Because you know which of those lenders needs more DSCR loans to sell. You know which ones just got a screaming deal with a buyer that wants to get a chunk of them. And you know which ones are like, man, we can't give you a good rate because we got nothing to do with this thing. So you can steer the borrower into where their best opportunity is, both as terms of rates and costs, as well as the speed of which those underwriters are getting things done. You know which ones are selling lemons and pieces of junk, and you know which ones are selling really good cars. And that's what I think that's just a misconception in the mortgage industry is people think they have to go talk to a bunch of people and say, what's your rate, versus going to one person you trust and saying, what rates can you find me?
Absolutely. And that's, I'll even do you one better on top of that. We can go to these lenders, and because of the volume and the reputation that we've been fortunate enough to create, we can impact those programs. So if I tell people like David, when we first kind of invented, so to speak, the short-term rental loan, I went to one of our really flexible investors and said, hey guys, this property that David and I bought, it'll rent for $20,000 a month. You're giving me credit for $3,000 on the long-term rental income. You got to have some flexibility here. I can help you build out how I analyze these properties. How do I do my due diligence? How do I have confidence for what it will rent for? Because I underwrite this when I buy during my due diligence period. We need to create a loan product that is more flexible and allowed for these things, right? Now everybody can do short-term rentals, right? 5 years ago, nobody could, you know? So working with somebody that not only, you know, yes, we can go shop, we can find the best terms, but we may not take the absolute lowest because like David said, we know which underwriters can actually close a deal, right? But we also have a capacity of being able to influence. That's, I think, the most important thing by far is if you need something, can we work on going and get it? For instance, right now, we're creating options for midterm rentals. No DSCR lender can do that right now. How do you underwrite a midterm rental? I don't know. It's hard, right? So usually we have to have it fall between one of the long-term rental or short-term rentals, but we're addressing that need because there is such a growing desire for people to get rent by the rooms and pad splits and all the different midterm, you know, all the different slogans that midterm rental, you know, furnish finder, whatever. There's a huge need for it. So,
all right, let's talk about that. What options are there and what are the misconceptions with medium-term rentals?
Yeah, 100%. So a lot of people think, oh, if I go get 5 or 10 leases from my 3-bedroom house, I can use them because somebody's in the living room, somebody's in the bathroom, you know, depending on how you chop the house up, right? Now we have options if you are refinancing and you have proof of rent received. But what I would tell you guys is if you are midterm renting, you should talk to me first, because all of the solutions are very different. We need to find the one that best fits for you, okay? We have one option for a master lease where you get all those people to sign one big lease. Give us that with one person, you know, give the person in the master bedroom $100 off their rent to collect everybody's payment and submit it to you, right? You kind of have like a little built-in property manager there, right? Number 2, on projecting income. Now this is not out yet, right? So I'm kind of putting the cart before the horse a little bit here, but we're building a program very similar to what we built with short-term rentals to give you projected rental income on midterm rentals. That is not available yet. So as of right now, you need to have the property work as a short-term rental, and you could just operate it as a midterm after the fact. But if you are working in the midterm rental space, the pad split space, the furnished finder space, you should definitely set up a consultation with me, and I can guide you towards a DSCR loan that is actually closable. Instead of you going and getting all these quotes where people can tell you 15% down, no problem, and nobody can close them. That's the tricky part, because they're combining a little bit of what this investor says, a little bit of what this investor says, a little bit of what this one says, and they're saying it's all one product. It's not. It's not. I promise you guys, we work with every short-term rental lender out there. I know all their guidelines, unfortunately, like the back of my hand. And I say unfortunately because it's a hell of a lot of work to stay up to date with all these guys. But that's my job, not your guys' job. That's why I'm the one sitting here telling you guys, please come talk to me, because I would rather save your deal day one than save your deal when you give me 3 days left in escrow after your previous lender failed, right? Which